Welcome and thank you for joining us. You're listening to the Beyond 50 radio program. I'm Daniel Davis. April is just around the corner, and well, we know what the middle of April brings for a lot of people. That little chill up the spine, or perhaps that cramp in the stomach, and certainly a lot of thoughts about what you're going to do when it comes to the IRS. On the Beyond 50 radio program, we're going to welcome back a guest that we've had who has more than 3 decades. That is right. We're talking about 30-plus years as the nation's leader in taxpayer rights defense and IRS abuse prevention and cure. He's going to let us know how we can get around perhaps not having to pay those taxes on canceled debt. We'll be dealing with things such as home foreclosures, credit card debt forgiveness, short sales, canceled student loans, and even negotiated settlements with creditors that can lead to debt forgiveness income. So we're going to be joined on the program today, and our guest is Daniel J. Pilla, and his book is How to Eliminate Taxes on Debt Forgiveness. Daniel, how are you today?
I am well, Dan. How are you? Thanks for having me.
Well, you must be well because you've got the inside dope on probably the most powerful government body there is on planet Earth.
Well, I do have the inside dope on these guys, Dan. No question about it. I've been dealing with this IRS issues for, as you mentioned, over 30 years. So, yeah, I've spent a lot of time dealing with these guys for sure.
Mm-hmm. Now, I know that my experience has been relatively pleasant with the IRS. To give you an idea, about 6 or 7 years ago, I was kind of late filing business taxes. I mean, sometimes it's just a matter of do you have the income to pay a CPA and so forth and so on. But it ended up when they got finished that I got a bill from the federal government for about almost $5,000. So I just simply called them up and I said, look, I'm calling to tell you I'm not a victim. This is what really happened. I'm sorry I was late, so forth and so on. And the lady says, hold on a minute. She gets back on the phone and she says, we're going to go ahead and give you a one-time abatement. So they just erase the debt right over the phone.
Well, they erased the penalties on the debt.
Oh, the penalties. Yeah. Okay. Okay, so go into that a little bit then.
Yeah. That's. I'll tell you what. It's a very important thing. And what happened to you is unusual. It's not unheard of, but it is unusual. The IRS has what they call a first-time abatement policy. First of all, let me give you a general overview of IRS penalties and how they work.
Okay.
All right. Last year, the IRS assessed over 38 million penalties, Dan, against individuals and businesses, and there was only 135 million tax returns filed. So you can see how prevalent these penalties are for businesses and individuals. It's a real big problem. Every single penalty provision of the tax code has what's called a good faith or reasonable cause provision. And what it means very simply is if you acted in good faith and based on a reasonable cause for your actions, in other words, you didn't deliberately disregard IRS rules and regulations, but there were circumstances beyond your control that kept you from paying or filing the return, the IRS will cancel the penalties. All right? So that's the general reasonable cause let's say excuse or alternative for canceling penalties. The IRS has what they call a first-time abatement policy, and this is separate from the reasonable cause criteria. And what the first-time abatement policy says is if you haven't had problems with the IRS in the past, mm-hmm. if in the last 3 years you have never filed a return late or never paid your taxes late, you filed everything on time, paid on time, the IRS will essentially give you a do-over for that one mistake. They'll say, look, it doesn't matter if you had reasonable cause or not. It doesn't make any difference what the reason was. If this is your first time falling off the beam, we'll give you a mulligan. Now, okay, so they did that in your case, and that's great. But here's what the problem is, Dan, and General Accounting Office, Government Accounting Office studies have shown that the Internal Revenue Service is about 92% lax in granting these abatements. In other words, what I mean by that is for every 100 people who qualify for this first-time abatement, only about 8 of these people get the abatement they're entitled to without specifically asking for the first-time abatement based on the facts and circumstances of the case. So you got lucky, and most people, unfortunately, don't get lucky. They have to know going in that the IRS has this first-time abatement policy before they can take advantage of it, which is completely unfair. It's the IRS's policy. They should know what the rules are. They certainly can look at a person's history with the IRS, their account file, if you will, with the IRS, and know if they have or have not had problems in the last 3 years, and just hand out the abatements when they're proper.
Okay. Now, that being said, we put the abatement aside. Now, is there another strategy where you were talking about reasonable cause or something like that?
Yeah, exactly. Let's say somebody doesn't have a first-time abatement strategy available to them, or, for example, you owe for 2 or 3 or 4 years worth of penalties. Now, the first-time abatement only applies to 1 year. So if you've got a string of penalties, failure to file for 2 or 3 or 4 years, if you qualify for first-time abatement, it's only going to help you with the first year in that string, not the subsequent years in the string. And so now the question is there another strategy? And the answer is yes. And that is the reasonable cause strategy. Regardless of how many years you owe for, whether it's 1 or 3 or 10, if you can demonstrate to the IRS that your failure to file, failure to pay, whatever it may be, was due to reasonable cause and not willful neglect, in other words, you did not deliberately disregard IRS rules and regulations, then you can get the penalties canceled. Now, generally speaking, here's what you have to show. You have to demonstrate to the IRS, and this is done in writing. You can't ever do this on the phone. It'll never work over the telephone.
I can imagine over the phone. Can you hear my story for the next half hour?
Yeah, exactly right. And then the person on the other end is yawning and saying, and they don't believe you, and so I mean that's hopeless. You got to do it in writing. And what you're going to do is you're going to craft a letter that provides a detailed explanation of your facts and circumstances with supporting documents to the extent possible. And that letter has to communicate to the IRS the idea that you exercised reasonable business care and prudence in providing for your taxes. In other words, you did the things that a reasonable person would do, knowing that you've got the obligation to file a return and pay the taxes, and due to circumstances beyond your control, unforeseen, uncontrollable circumstances, you couldn't comply on time. Mm-hmm. All right? If you can demonstrate that to the IRS, then they'll cancel the penalties.
Now, that sounds kind of complicated. Is it that complicated as it sounds?
Well, it's not. The only complicated procedure is very simple. What the procedure is you write a letter to the IRS at the service center where you normally file your tax returns. You're going to address your letter to what they call the penalty abatement coordinator. Okay. This is the person who's in charge of the staff of folks there that review these letters and decide whether penalty abatement is appropriate or not. So procedurally, it's very simple. You write the letter, you send it. What the complicating factors are, Dan, or can be, is communicating to the IRS exactly what your reasonable cause is. Most people do not give the kind of the level of detail and specificity that's necessary to show the IRS that you couldn't comply. The IRS's default position in any of these things, Dan, is you knew you had to file the return, you knew you had to pay the taxes, you didn't do it, end of story.
Right.
That's their default position. But you've got to demonstrate what the reasonable cause is. And I'll just give you an example of a case that I worked on some time ago, where the lady involved had a car crash in the spring of the year. She was seriously injured, hospitalized for about 5 or 6 months. After she was discharged from the hospital, she was in a rehab center for another 5 or 6 months, and she was incapacitated for almost a year. So it happened in the spring of that, like let's say February of 1 year. So here comes March, April, 2 months later. She's supposed to file her tax return. Well, she's in the hospital. She can't file the return. So then by the time she gets out of the hospital, she goes into rehab. She's in rehab for another 4 or 5 months, whatever it was. After she got out of rehab, of course, she's still trying to get her bearings, and the second year goes by and she misses another tax return. All right, so now she's missed 2 tax returns as a result of this car crash, and her life is still basically in a state of disarray. She's got cognitive problems because of brain injuries, and she never did fully 100% recover, but her ex-husband stepped up at that point, started helping her, getting her life in order, getting her bills paid, handling all of her affairs, realized these returns aren't filed. He gets the returns prepared. He gets the returns filed. IRS comes behind and assesses all these penalties, and then I step in with the penalty abatement request. And what I did is I documented the car crash. I gave a very detailed, very, very specific explanation of what happened to her, when it happened, how she had no control over it. The fact that the returns weren't filed was 100% attributable to the fact that she was in the hospital 1 year and essentially disabled the next year, and it wasn't until this third party stepped in that got this stuff together. Well, of course, the IRS canceled the penalties. Mm-hmm. All right, so that's And we had documentation to prove it. The accident report from the State Patrol here in Minnesota, the doctor's reports, photographs, et cetera, et cetera. So the trick with these things, the key with these things, is the proper communication of what's going on. You can't be vague. Most people are vague. They're not specific. They're too broad. They're too general. It does not allow, that kind of generality does not allow the IRS to look at what your situation was and really come to a conclusion that you did the best you could under the circumstances, but it was out of your hands. That's the key.
So we're talking about, in her case, a relatively extreme case, especially one with a lot of great detail with a car crash and then a rehabilitation, but what about people that are really getting pinched by, of course, the financial meltdown that we've been dealing with over the last 5 or 6 years?
Well, and that's a good question too, and that's a whole nother evaluation.
You can just imagine, Daniel. Here's a guy on the phone. I became unemployed. Pretty soon I exhausted all my tiers of unemployment. I couldn't afford to do my taxes. That sort of thing. But you can see the vagueness in his statement as well, like you're talking about. You want more detail than that.
Yeah, exactly. You need more detail, and I'll just give you an example. I'll give you some strings to pull on here. There's a difference between failure to file and failure to pay. When we're talking about failure to file the tax return, we have to demonstrate that there was some impediment to filing. In the case of the example I gave you, the lady was in a car crash in the hospital. That's clearly an impediment to filing. Illness, injury, lost records, fire, flood, hurricane, any of those kinds of things, displacement from your home, any of these kinds of things can be an impediment to filing, and they can give rise to relief for the failure to file penalty. Failure to pay is a different matter. A lot of times what I see is I'll say to a person, well, why didn't you file a tax return? And they'll say to me, well, I didn't have the money to pay. Okay, wait a minute now. Those are two different things. Mm-hmm. All right, not having the money to pay the tax is not a physical impediment to filing the return.
Right.
The IRS will take the position, and the courts will back them up on it, that simply not having the money to pay is not grounds for not filing the return. You still have a duty to file the tax return even if you don't have the money to pay the tax. And so just not having the money isn't going to be reasonable cause for failure to file because it's not a physical impediment to filing. Mm-hmm. On the other hand, not having the money to pay the tax can be grounds for not paying on time. Now, of course, the IRS's attitude is, well, there is no excuse for not paying. You got to pay no matter what. But, that's simply not true because the regulation in the tax code is very, very clear that if paying the tax would have caused a hardship, all right, if it would have caused a hardship, we're talking about a financial hardship, then that can be grounds for dismissing the failure to pay penalty. Mm-hmm. So in that situation, this is where that due diligence comes into play. You have to demonstrate that you exercised due diligence, reasonable care and prudence in providing for your tax, but you couldn't pay on time because of circumstances beyond your control. You talked about losing your job. We've had, over the last 5 or 6 years, and of course this is the subject of my book, How to Eliminate Taxes on Debt Forgiveness, we've had millions of people. In fact, it's well over 15 million, probably closer to 20, 25 million people, Dan, that have had serious financial problems that have led to bankruptcy, foreclosure, short sales on their homes, credit card debt, repossessed automobiles, go down the list, right? There's millions and millions of people that have had these problems. And when you can demonstrate that your failure to pay the tax was directly attributable to financial circumstances beyond your control, this downturn in the economy that crushed your business or was responsible for losing your job, or maybe you didn't lose the job, but you had to take a serious income cut. You end up on unemployment, which only pays you, 40, 50, 60% of your wage anyway, et cetera, all these things that so many people have lived through. These can be grounds for cancellation of the failure to pay penalty.
Okay. And this, and also part of what I was asking, too, isn't so much that you go and file a return realizing that you're going to owe money, so you don't file the return. But the point is being able to file a return because, some CPAs, you're looking upwards of $1,000, $2,000, $3,000 to be able to do this for a business or, a small business owner, and somebody may be in a financial hardship not being able to pay these people to prepare these things for them.
Yeah, and that's a good point, and I see that all the time as well, where somebody has said, I didn't have the money to get the returns prepared. Mm-hmm. Well, again, the IRS is going to look at that and say, well, we have a free tax return preparation service. You should have come in. You should have called us. You should have asked us. Now, Dan, you and I both know that anybody with any sense is not going to go to the IRS to have their tax return prepared. All right?
I remember back in high school, we were actually learning to fill out the 1040A form. You know, I think I was in my sophomore year of high school, and it said, "Check here if you would like the IRS to complete your taxes."
Tax,
the teacher just looks at us coldly and says, "You don't want the IRS doing this."
No, you don't want the IRS doing this. And look, and we all know that.
Right.
But how do you tell somebody at the IRS that it's sheer stupidity to have the IRS do your tax return for you?
Mm-hmm.
You know, you can't sell that. It's very difficult to sell, and unfortunately, as I said, the courts are going to back the IRS up on that proposition. So the failure to file is a little dicey. It gets a little tricky if your only excuse is I didn't have the money.
Mm-hmm.
All right. So now here's the other thing that comes up in these discussions, Dan, and that is this. Almost everybody, and this isn't true across the board, of course, you can't generalize these things because cases are different. You know, people's circumstances are different. But generally speaking, when you delve into what was going on in somebody's life during this period of immense hardship, unforeseen hardship, there are a lot of factors that come up apart from, I just didn't have the money.
Right.
How about, for example, because of your financial situation, you end up in a divorce. I just got off the phone with a client not 15 minutes ago that I've been working with who says, Dan, my wife left me. She couldn't deal with the stress of the IRS anymore. She couldn't deal with this, with the financial pressures that we've been under. She's left me. I've had to go find, a different place to live, and I had to go find a different, mode of transportation. Well, listen, when you got these kind of financial problems or other problems, medical, whatever they may be, marriages go south too.
Oh, absolutely.
All right, it happens all the time, and so, if that was a circumstance where maybe you were displaced from your house because of this situation, or maybe your personal life got so bad because of this situation you couldn't attend to any of your affairs, well, all those can be reasonable cause grounds as well, Dan. So I mean, it's not just a one size fits all deal for sure. It's something that has to be developed based on the facts and circumstances of the case.
Mm-hmm. Now, I know that you talk about a 1099-C form. What exactly is that?
Yeah, the 1099-C is the form. It's an information return that a creditor will send to the IRS when you have a debt canceled. It's the subject of my book, How to Eliminate Taxes on Debt Forgiveness Income. If you've got, for example, you've got $20,000 worth of credit card debt. You get on the phone, you negotiate a settlement with the credit card company. You're flat broke. You lost your job, right? You're in this dire financial straits situation, and so you do what any reasonable person would do. You try to negotiate with the creditor. You try to get them some money and get some relief on the balance, so at least you can get on with your life, right?
Right.
All of that stuff makes perfect sense, and so you negotiate this deal with the credit card company, and let's say the credit card company agrees to take $5,000 and cancel the other 15. Okay, great. So you're able to borrow money from Uncle Louie, pay the credit card company $5,000, and walk away from $15,000, and you think it's a great deal, and in fact, it is a great deal. But now what happens is the credit card company sends the IRS a 1099-C. The 1099-C says this person had $15,000 worth of debt cancellation income. So in other words, when that debt is canceled, the creditor reports that to the IRS on the 1099-C, and the IRS takes the position that the amount of debt canceled by the creditor is income to the debtor. And so now,
boy, they think of everything, don't they?
No, I mean, isn't it? I mean, it's just bizarre. But here, so what happens is at the worst possible time of your life, when you've got this debt, maybe you've gone through a bankruptcy, maybe you lost your house to foreclosure, you've had these, credit card negotiations going on, maybe you even lost your car to repossession. You've got the worst possible time, and now the IRS wants tax on $15,000 worth of phantom income.
Right. Almost sounds like they figured out the Enron scam.
Well, and here's the thing, Dan. I mean, it's a situation where it's very bleak on the front end, Here's what the good news is. I mean, I just kind of gave you the bad news there, but that's not the end of it. The good news is that, look, at the general rule under the tax laws, when you have debt canceled, that's considered income. That's just what the law is. We could get into explaining the science of it and the math of it, but it doesn't matter. The bottom line is that's how the law treats it. However, the good news is there are so many exceptions to the general rule that virtually everybody that's got one of these 1099-Cs is not going to end up paying taxes on the canceled debt if they understand what the exceptions are and how to present them to the IRS. Mm-hmm. And as I say, there are many of them. They're very common. They're easy to understand. I go through in my book, How to Eliminate Taxes on Debt Forgiveness. I walk you right through what all the exceptions are. I show you how they apply. I show you how to calculate them mathematically. It's not rocket science by any means. And I show you how to present it to the IRS so you don't end up paying taxes on this stuff.
Mm-hmm. Now, I know one of the things you talk about, too, that's huge in America is student loans.
Yeah.
Tell us about that.
Well, you know, there's student loan debt is just massive, you know. And
well, it's not only that, but you take a look at people, you know, these kids are coming out of college, there's no jobs. Pretty soon, you know, you can only belay this payment so long, and then pretty soon you're getting all this interest upon interest upon interest, you know, and it's like it just spins out of control. So.
Well, there's no question about it. Kids are coming out of school with, you know, $80,000, $100,000, $120,000 worth of student loans. Dan, it's like buying a house when you're 21 years old and you've got no capacity to really pay for the house. You know, and the wisdom of these student loans is a whole other topic, and you know, that's something else entirely. But there's more bad news with the student loans, and that is when you got these kids that can't find jobs in their profession, or they find jobs and are not making nearly as much money as they thought they were or believe they should, or they're not in their profession at all and they're flipping burgers someplace, which happens a lot. You know, they can't make these student loan payments. They end up in forbearance or deferral of some kind. You know, the student loan tax debts are not dischargeable in bankruptcy, so it's something that you're going to carry with you forever and ever. However, there is a provision under federal law that says if you get a job in certain specified industries, certain specified professions, then a portion of your student loan will be canceled as a result of your service in those professions. For example, if you work in a police department or a fire department, if you work as a teacher in certain school districts that are certified by the Department of Education as serving high-risk kids, you know, there's a whole laundry list of them. I got them in the book. There's like 16 or 17 different job descriptions that you could work in and get a portion of your student loan canceled. And when they cancel student loans as a result of service-related activities, service-related benefits, shall we say, then that cancellation of student loan does not constitute taxable income either. Mm-hmm. And so that's one of the exceptions that would apply. And so what we're seeing these kids do, Dan, more and more, is get jobs in these service-related areas, specifically so they get some relief on their student loans. Then what happens is the processing company, the student loan processing company, sends in the 1099, of course, to the IRS, and now the kid thinks, well, wait a minute here. I'm serving in this industry. I'm supposed to get this loan canceled. Now I got this 1099. Well, again, you, the citizen, have the burden to prove to the IRS that the exception applies, and so I show you how to do that in the book.
Now, I know there's so much here that people can actually learn from and go through, and you've laid out the book in a way that a person could, step by step through procedure, learn not only how to play the game, so to speak, but also, you know, work with the rules as well. Yeah, no question about it. I mean, look, at this thing is all about, it's all about the rules that are expressed in the tax code, all right? I'm not, there's, you know, people are shocked to learn that the code provides, you know, this bit of relief or that bit of relief, because we're always taught that the Internal Revenue Code is nothing but a series of booby traps, and there's no question that there is a bunch of booby traps in the tax code. But here's the thing, Dad. When you've got a tax code that consists of about 4 million words, you know, there's some good news in there too. and you know, when we're talking about this debt forgiveness thing, there's a lot of good news in there, mm-hmm. because there's, as I said, there's so many exceptions to the debt forgiveness rules that when you understand what they are, it's not a matter of taking unfair advantage. It's not a matter of misusing loopholes. That's not it at all. These are very
specific provisions of the tax code that Congress put in the law purposefully to allow people to get relief in this situation.
Fascinating. Daniel, it's always a pleasure to have you on the program. Is there a website our listeners can find out more about this?
Yeah, absolutely. The book, How to Eliminate Taxes on Debt Forgiveness, is available right on my website. It's taxhelponline.com. That's all one word. There's no dots or spaces or anything. Taxhelponline.com, or they can call my phone number, 800-34-NO-TAX. That's 800-34-NOTAX, or the website again, taxhelponline.com.
Daniel, again, thank you so much for joining us here on the program. I think you've given a lot of hope to a lot of people out there about April 15th.
Well, I hope so. Thanks for having me, Dan.
Thanks again. We also encourage you to visit us at beyond50radio.com. We'll have more information there about Daniel J. Pillar's book, How to Eliminate Taxes on Debt Forgiveness, so you can find out where to get it, how you can get yourself out of that trouble that you may be in. I'm Daniel Davis. Thank you for joining us. This is the Beyond 50 radio program, and remember, live your day past halfway.